Could the housing market get crazier? Well, the short answer is yeah, it could. The reason why is because of something that we've never really seen before, and that's called mortgage rate lockdowns, or it's this phenomenon of maybe a mortgage rate lockdown. So, what that really means is that if you thought real estate was over, it could just be getting started. Hey, it's Eric, and I break down housing data analytics so that you don't have to. And today we're talking about mortgage rate lockdowns and the significance that they're going to play on the housing market and the fact that they already are having an impact. Redfin published an article that came out showing a new listings decline. So these are homes that historically would follow a trend that is based upon time and upon season of when sellers want to list their house. And year over year, that has been falling. And so we're seeing a decline continually of new listings hitting the market. And so what's the reason behind that? Well, we know that housing has been expensive and that it's been going up in value and in price. But what people maybe have missed is how much interest rates are impacting the affordability for buyers to be able to get into the market. With rates climbing so high, so quick, just since this time last year, 30-year fixed rates were around 2.8%. And now for conventional standard 30-year fixed, I mean, you're looking at mid 6%. I've even seen some that are starting to get over 7% now. That means that $400,000 house that you could have bought last year is going to be costing you almost $1,000 more a month just in interest alone. So what does that mean? Well, it means that people that would have traditionally been move-up sellers, say they bought a house, lived there for a couple of years, and they were going to move up into a bigger house or to a newer house, that means that maybe they're not going to do that now. It's going to force people into this situation where if they don't have to sell, they're not going to sell. There'll always be people that have to due to jobs or economics, but a lot of homeowners right now are sitting in a really good position where they've got really low fixed costs for their housing. And if they don't have to sell, why would they? And so that's being reflected in this new listings data that we are seeing, where prices are going down a little bit, but not nearly enough to reflect the overall cost of the home, including the mortgage rates. Well, what if it bottlenecks even more and you have a standoff between buyers and between sellers? Buyers want it lower, sellers won't agree to it. They'll say, no, we'll just stay. We don't have to sell. If we can't sell it for what we want to get it, we'll just stay there. There's a big disconnect between right now, between sellers and buyers, because sellers think it's worth something, buyers think it's worth something else. And right now we're at a standoff to see who's going to win, who can hold out the longest. And chances are right now, homeowners are in a good position to not have to sell if they don't want to. What does that mean for next year? Well, we really don't know, but new listings are really, really down. And so the interesting thing will be to see what happens next spring when seasonally new listings are supposed to peak. The Fed continues to push. Is there a breaking point for the economy? Is there a point where they'll reverse course and start to lower rates? What happens if the Fed starts to lower rates at the beginning or mid next year? The Fed has already signaled that they expect for a recession to happen next year. In fact, they're trying to make a recession happen. They want that to happen. What's going to happen if there's this stalemate long enough and then there's a break and then the Fed starts to lower rates and there's super low inventory already? Could that cause another escalation in home sales, in the price? Could it cause homes to become more valuable again? More competitiveness, a more difficult market to navigate? Time will tell, and we will see what happens. But as of right now, it's very interesting. We've never actually seen a mortgage rate lockdown, not technically, because mortgage rates have never risen this fast, between, at the beginning of the year, you could still get mortgage rates in the 3%. And then now, less than 6 to 8 months later, they're around 7%. It's a massive affordability difference. And so time will tell, and I'll be here to help guide you through it. Until then, we'll see you at the next video.